Hi, welcome back to ATFX Trading. Now, let's take a look at weekly overview on Euro USD for 24th January to 28th January of 2011. Before we head on, let's review on the past week report from our blog. Now, we are at a blog post of January 17th, 2011. Now, let's check these slides where we just marked a strong resistance as the price have touched 5 times and it was hard to break above this 1.3400. On our last video, we mentioned that the price breaking above or below of this resistance or this support will clearly lead us the direction of Euro USD. Now, let's see what happened. This was the support and resistance that we drew last week in D1 chart. Now, if you see the same chart in H4 and we just drew a Fibonacci retracement from this low to this high and the price touched 38.2 and bounced back to the resistance. And it was hard for the price to break above 1.3500. Which is also a psychological level. But on Friday, 21st January, there was a market moving economic data released for Euro, which is called IFO Business Climate for Germany, published at 9 GMT. And this report came out with a high number, which is extremely positive for Euro, gave a strength and Euro pumped up above 1.3500 and clearly heading north. That's where we are seeing in the D1 chart. Now, let's see the forecast for the following week, for Monday, 24th of January. As it is clear, the Euro is heading north, and where does the resistance lies for the bullish pressure? And this is the high, which is at 1.3791. We can round it up to 1.3800. Is 22nd 11 2010 high. This is the immediate resistance above 1.3500. And also, if we take a look at the weekly chart and if we connect this higher high to the lower high of 29/11/2009 to 31 October 2010, and the price is currently trading at 1.3620 in D1 chart, the price must break above this immediate resistance at 1.3800 to hit the trend line, that which we drew from weekly chart. Now, there are two possible ways the Euro USD could move for the following week. The price must hit this 1.3800 and retrace back, or break this 1.3800 and hit the trend line and retrace back. Now, let's see which makes more sense. In H4 chart, if we draw a Fibonacci from this high till this low, which is from 1.3456 14th January 2011 high till 1.2873, which is 10th January 2011, the projection of this particular Fibonacci wave in D1 chart, the 161.8 projection of this wave is exactly coinciding with 1.3800, which is also 22nd 11/2010 high. So which makes more sense. Now, if we draw a Fibonacci from this low to the projected high, and we have our first target 38.2 is almost coinciding with the previous 5-point resistance, which is at 1.3450, and 61.8 is at 1.3238. We can round it up to 1.3200. So the market must first fall to 38.2, or it may breach 38.2 and fall till 61.8. All that depends on the crossover of this 1433 and 533 stochastics on D1 chart to bend down and come below 80 on this both 533 and 1433, which will give us a confirmation that it is a reversal point and the market will come till 38.2 and 61.8. So the call for the week is, if the Euro USD touches 1.3800 and the D1 stochastics 1433 and 533 have crossed over and have come below 80, means we can go short in euro. Or if it breaks above this and touches the trend line, and at the time when the D1 1433 and 533 of stochastics cross over and come below 80, we can go short and we can take our target till 1.3500, which is a solid of 250 pips to 300. So thank you for watching the technical analysis side. Stay tuned for fundamental view so that the fundamental and technical can combine, make more success in our trading.